Welcome to today's What Will Move the Market show. I'm your host Prem. It's Tuesday, January 6th, 2026, and here is everything you need to know as the markets open for today. Overnight on Wall Street, the New Year rally picked up fresh steam. The Dow Jones Industrial Average jumped to a record closing high, finishing around 48,977, up nearly 1.2%. Energy and financial stocks led the charge as investors cheered the United States, dramatic military operation in Venezuela, and the capture of Nicolás Maduro, which is seen as opening the door for American oil majors to regain access to some of the world's largest crude reserves. The S&P 500 also put in a strong session, closing near 6,902, up about 0.6%, its best single-day gain in a couple of weeks and just shy of all-time highs. The Nasdaq Composite snapped a recent losing streak, ending around 23,396, up roughly 0.7%, helped by a rebound in big technology and semiconductor names. The key driver for sentiment was the view that, despite the geopolitical shock, oil supply from Venezuela could be reorganized rather than disrupted, which pushed up shares of Chevron and other U.S. oil producers. Financials such as Goldman Sachs and JP Morgan also rallied on expectations of better deal activity and loan growth as the year begins. On the flip side, some of the high-flying defensive and utility names lagged as money rotated back into cyclicals. In after-hours action, there were no major index-moving earnings, but traders remain focused on upcoming U.S. data later this week, including the key jobs report, which will guide how aggressively the Federal Reserve may cut rates in 2026. For now, the takeaway from Wall Street is that risk appetite is improving, with investors comfortable adding exposure to energy, financials, and quality technology at the start of the year. Turning to cues from Indian companies listed in the U.S., Indian ADRs had a mixed night, and will be important signposts for local traders. Based on the latest available data into early Asia, Infosys ADRs are trading weaker, reflecting some profit-taking ahead of results next week. HDFC Bank's ADR has seen a sharper decline, suggesting continued concern around margins and loan book quality after a strong run last year. ICICI Bank's ADR, in contrast, is relatively steady to slightly positive, indicating that global investors still see it as a preferred private sector banking play. Reliance's ADR has been largely flat, with global investors waiting for more clarity on the energy and retail outlook in light of shifting oil dynamics and consumer trends. For Indian investors, the message from the ADRs is that global money remains selective within financials and IT. Strength in ICICI versus weakness in HDFC, and Infosys tells you, stock picking not sector buying is likely to dominate. From there, let's move across to early Asia and the lead indicators for our own open. As of the latest closing prices, Japan's Nikkei index ended its Monday session just above 52,130, marginally lower by about 0.1%. That small dip comes after a huge rally in recent weeks, and traders in Tokyo are now watching the yen and Bank of Japan commentary on any shift away from ultra-loose policy. In Hong Kong, the Hang Seng closed its previous session near 26,513, up only about 0.02%, reflecting a very cautious mood as investors weigh China's uneven recovery against ongoing property sector stress. Over in mainland China, the Shanghai Composite finished its Monday trade around 4,006, up roughly 0.9%, supported by gains in financials and state-owned enterprises after fresh hints of targeted policy support from Beijing. These are all previous session closes. Live trading in these markets will pick up as the Asian day progresses, and we will track whether the positive tone from Wall Street carries through. For India specifically, the GIFT Nifty futures are giving an early thumbs up. As of the latest tick before 7 a.m., GIFT Nifty is hovering just above 26,400, pointing to a mildly positive start for the Nifty 50, compared with Monday's close near 26,393. That suggests a gap up of a few dozen points at the opening bell, with traders likely to follow global cues on energy and financials. The broader Asian backdrop is one of guarded optimism. Investors are watching how the Venezuela story reshapes oil flows, how China's gradual policy support filters into earnings, and whether any new tensions emerge in the Taiwan Strait or South China Sea that could spill over to risk sentiment in this part of the world. On the global news and geopolitics front, the single biggest story remains the US-led military operation that toppled the Maduro regime in Venezuela and the stated intention of Washington and American oil companies to ramp up involvement in that country's vast energy sector. For markets, this has two competing effects. In the near term, it raises geopolitical risk in Latin America, but over the medium term, it is being interpreted as potentially positive for global oil supply if production is normalized under a more market-friendly regime. That is why energy stocks rallied, even as crude prices have been relatively contained. Central bank policy remains in focus as well. Federal Reserve officials have signaled that while inflation has cooled, they are not in a hurry to slash rates aggressively. Markets are still pricing in rate cuts, but fewer than what was expected a few months ago. For Indian investors, stable to softer US yields are supportive of foreign flows into emerging markets, even if valuations on Wall Street look stretched. There is also growing attention on how the evolving US-China chip tensions and any fresh trade measures on technology could spill over to Indian IT and electronics manufacturers, though nothing concrete has emerged overnight. Back home, let's talk about what the Indian market setup looks like before the bell. The Nifty 50 closed the previous session around 26,393, while the Sensex ended just above 85,400. Despite intraday volatility, the underlying trend remains positive, supported by domestic mutual fund inflows and improving corporate earnings visibility. Foreign institutional investors have turned more balanced, alternating between mild selling and selective buying. But the strong start to the year on Wall Street could tempt them back into Indian financials, autos, and capital goods. On the news flow side, the street is watching for any fresh commentary from the Reserve Bank of India on liquidity operations and open market bond purchases, especially after the recent volatility in the rupee and bond yields. Any hint of sustained bond buying by the RBI tends to support rate-sensitive sectors such as banks, NBFCs, and real estate. Sector-wise, banks, autos, and select industrial names are expected to remain in focus, while IT could be choppy ahead of the earnings season, especially with Infosys and TCS numbers on the horizon and global clients tightening tech budgets. If there are any sudden tweaks from SEBI around derivatives or margin rules, those could quickly alter intraday sentiment in the F&O-heavy names, so traders should keep an eye on exchange circulars through the morning. Let's also set up some key technical levels for the day. For the Nifty 50, immediate support is placed in the zone of 26,200 to 26,100. A break below that region can open up a deeper move toward 26,000, which has been acting as a strong base for the last few sessions. On the upside, immediate resistance is seen around 26,500, and beyond that near 26,700. Sustained trade above 26,700, with good breadth, could reopen the path to the 27,000 handle in the coming days, but any failure there might trigger profit booking, especially in the high beta mid-caps. For Bank Nifty, the first key support zone lies around 59,500, and below that near 59,000. On the upside, resistance is clustered near 60,000 and then 60,500. A convincing move above 60,500, with strong volumes in the frontline private banks, would be an important bullish trigger, whereas a slip below 59,000 could invite faster selling, given the heavy futures positioning on the index. Intraday traders should respect these zones as potential turning points rather than exact numbers, and be ready for whipsaws around them, especially on a globally sensitive day like this. Moving to commodities, which are increasingly central to the equity story, crude oil prices have cooled off despite the Venezuela headlines. West Texas Intermediate crude is trading near $57 a barrel, slightly lower on the day, as the market believes that additional Venezuelan supply over time could balance out other disruptions. For India, crude holding in the mid-50s to high 50s range is broadly positive. It eases pressure on the current account and inflation, and supports sectors such as airlines, paints, and logistics. In precious metals, both gold and silver have been volatile, but remain elevated after one of their strongest years since the late 1970s. Gold futures on the COMEX are hovering around the mid-4,400s in dollar terms, close to recent highs, reflecting continued demand for safe havens amid geopolitical uncertainty and expectations of eventual rate cuts. Silver has seen even sharper moves, with recent multi-percent daily swings that underline the speculative interest in the metal. For Indian equities, persistent strength in gold and silver usually benefits jewelry and bullion-related plays, but it can also signal a cautious undertone toward risk assets if the rally is purely fear-driven. Finally, how should you think about the day ahead as a trader or investor? With Wall Street hitting records and Asia cautiously positive, the early bias for Indian markets is upward, but this is not the time to chase every gap up. The smart approach is to align with the broader uptrend while being very selective. Focus on quality large caps in banking, autos, capital goods, and energy, where earnings visibility is improving, and avoid over-leveraged or purely momentum-driven names that have already run far ahead of fundamentals. Intraday, respect your stop losses around the Nifty and Bank Nifty zones we discussed, and be mindful that global headlines around Venezuela, US data, or any surprise central bank comment can quickly change the tone. For longer-term investors, days like this are better used to review asset allocation rather than making aggressive new bets. And with that, it's a wrap on this morning's edition of What Will Move the Market. Stay tuned for the evening wrap. Send in your questions and thoughts on what you are watching in the markets today, and subscribe to this podcast to hear US every day as we guide you through each trading session.